Thank you for staying tuned. The South African government has made an extra 59 billion rand available to state-owned power utility Eskom over the next 2 years so it can meet its obligations. Eskom, which supplies more than 90% of the country's electricity but has implemented severe power cuts this year, fails to generate sufficient profit to meet its debt servicing costs and has required state cash injections to stay afloat. The cash injection, sourced from the government's National Revenue Fund, provides 26 billion rand for the 2019-2020 financial year and 33 billion for 2020-2021. And Kenya's finance minister has surrendered himself to the police after the chief prosecutor ordered his arrest over allegations of corruption. Henry Rotich is accused of flouting procurement procedures in awarding a contract worth over $450 million for the construction of 2 dams to the Italian company CMC de Ravenna. In March, Mr. Rotich denied any wrongdoing in a large newspaper advert. The company has also denied the accusations. The director of public prosecutions, Nordin Haj, is also investigating how the tender was awarded for $170 million more than was in the original contract. In the meantime, the Consolidated Bank of Kenya has extended the maturity of its 2 billion shilling medium-term note by 3 months to allow its biggest shareholder, the government, to inject more capital. The 7-year bond, which was issued to shore up the bank's capital, allowing it to lend more to its customers, was due to mature on July 22. It will now mature on October 22 under the same terms with additional interest payments for the extension. Consolidated, which is 85.8% owned by the government, was formed in 1989 when the state merged 9 troubled financial firms. Efforts to privatize it, along with a host of other government-owned enterprises, have been delayed for more than a decade due to red tape on the state of its books. And Zimbabwe has hiked fuel prices on Monday for the second time in a week, but most pumps remained dry, with no end in sight to shortages that are helping drive inflation rapidly higher and which have led to protests about the cost of living. The Zimbabwe Energy Regulatory Authority said a liter of petrol would now cost 7.45 Zimbabwean dollars, up 22% from $6.10. Diesel now costs 7.19 a liter, a 23% rise. With inflation soaring, economic analysts say increases in fuel prices are adding to price pressures, especially as rolling electricity cuts are forcing businesses to use expensive diesel generators to power their operations. Well, it looked like a good start of the week for the Nigerian market at intraday as the index was marginally up. Now it's about 15 minutes to the close of market. Let's see how the index is doing at the moment. Let's talk to Temple. Hello, Temple. Good afternoon. So bring us up to speed with the index movement and, of course, the drivers.
Well, the market's back down again to the South territory. We're seeing a decline of some 0.20% in the key benchmark indices after it moved positively earlier, some 0.03% upwards. However, we're seeing some good performance now across the sectors, across the consumer goods, the industrial goods, the banking names, and in fact the insurance sector of the market. I think given the gains we saw earlier around Access Bank and UBA by some 4 to 5% margins, that helps the banking sector, that's banking sector performance. Nestle also made some gains, about 1%, 0.1% increase earlier. That also helped the consumer goods sector. UACN also gained some 10%, so that also pushed up the indices of that subsector. If you look at what we recorded at midday across the counters of Consolidated Hallmarks Insurance and a couple of other insurance firms, that also pushed up the indices of the insurance sector in the market. So put all of this together, they squared up into what translated into gains earlier in the day. However, we're seeing some sell-off across some other names right now. That seems to be responsible for what has reduce the gains that we saw earlier into the negative territory. Then again, if you look at what we've seen across the banking sector, which has pushed up the indices to some 0.40% now, I think it boils down to the fact that we are in the MPC, CBN MPC week. They are looking to be making decisions across the MPR and, of course, a whole lot of other metrics, that guides the banking sector. There's been this consensus across board that we're likely to have 50 basis points to 100 basis points rate cuts in the MPR, and that seems to be responsible for the level of gains that we are now recording in the banking sector in the market. If that comes through, then perhaps it will have some kind of a reflection here in the stock market, because Chimeze, that before now the market has really experienced some huge declines up until Friday, where we had a bit of 0.2% gain. So I think eyes now is on the MPC. Tomorrow, when the decision will be made, we get to know what the MPC members have decided as to rates, if they're going hawkish or they're going dovish, or they're just going to remain the way they left the rates at the last meeting. Because since the March 2019 rate cuts that we saw, we have seen rafts of decisions from the CBN for the banks, talking about how to increase lending to the various sectors of the economy, so they can also boost their loan book, as opposed to just trying to build their interest income, which is what the banks have been known for in recent times. So basically, traders here, investors, retail and institutional investors, got their eyes currently fixed on the CBN MPC, and we'll see how that pans out tomorrow. Then we'll see how the market will go ahead and react to it.
Yeah, all of us here, we're also looking forward to hear what the central bank Governor Godwin Emefiele and his team would come up with tomorrow. Thank you, Temple, for those updates. And finally, Africa's potential workforce will likely be larger than that of Asia by the end of the 21st century, as both continents wrestle with different demographic and economic challenges. Well, this is according to a Bloomberg analysis of United Nations World Population Division data. The data shows that the number of 15 to 64-year-old Africans today is a quarter of the size of Asia's working age population. By 2021, however, Africa will surpass Asia. Asia will be confronted by an aging population, while the shift in Africa will be towards more youth in need of employment. And that's it on the program. Thank you for watching. I'm Chimeze Obi.